Hello everybody, welcome back. Let's have a look at Bitcoin, and we're going to look at the Dixie and the Nasdaq. I know, annoying, but no surprise here. You know, I've been doing that for a little while now. The reason I talk about them is obviously because we look at the Bitcoin as a downtrend. A downtrend is continuing, and I expect it to probably continue, to be honest with you, because we're looking at an overall picture, the grander, on a grander scale. So the Dixie being the dollar index, it did its retrace. This is what we said was going to happen last week when we got our move up to the top here. We said we're probably going to retrace down. First opportunity would be the 10 exponential. That's where we landed yesterday. Then most likely next place would be the 50, and at best we can go down to this horizontal. So again, you know, it's no massive, secret as why I thought that was going to happen. We've followed this in its uptrend, getting stronger and stronger and stronger, and every time it makes a big peak, it comes down to a 50 exponential or thereabouts. And this time was different because the dump was driven by inflation at 7%, and then the pump was the Fed going, don't worry, we'll sort it out. And so basically you got this giant weird anomaly here, but essentially what we're looking at here is an uptrend, right? A continuation of an uptrend, because I've been saying it for a while. It's almost become a bit of a catchphrase. The fundamentals haven't changed on the dollar. This is what I think that the dollar is likely to do. It's going to come back down to these levels and then finally break out, and it's going to remain in this area where it finds its peak around 100, which is basically the previous peak prior to the pandemic. And this is where it's going to settle. Doesn't mean that it can't break out. Doesn't mean that it's going to dump all the way back down. It means that it's likely to settle, and that's what I think it's going to do. It's going to settle in this area. And only when it settles can things really start to get exciting again for any market. At the moment, there's still a little pain between now and probably March, to be honest with you. So we've just started February. Got a little bit longer to go, and that's fine. That's fine. It's perfectly fine. Again, this is why I don't talk about, or entertain the idea of this being an actual bear market like the one in 2018. This was a bubble pop like the ones in the past, where it was FOMO, huge FOMO, and then a cooling off period that took best part of a year. This isn't the same. This was a peak. Don't get me wrong. There was a peak. Same with the Nasdaq, and loads of stocks all peaking at the same time, and then basically coming down incrementally, bit by bit, but not a bubble pop. So I don't think this is going to take the year to 18 months or whatever it is that people are touting for to recover. And it'll take time, don't get me wrong, but it's not as bad as everybody thinks. And again, it's not a particular crypto bear market. It's an economic balancing act to try and sort out your inflation, which is why we look at the Dixie, and then why we then turn to the Nasdaq. And again, all of these have basically worked out so far this week like we expected it to. Now what I'm thinking is that if it happens today or tomorrow, these will be reaching their resistances. This has been a nice bounce, and I think what we'll do now is come up to this center of this Bollinger Band, the 20 daily, which is around, it's very close to where we are right now, and then we get a rejection from there, and it's only there do we see, are we going to get supported above this level, or are we going to continue to go down? Given what I've said about what I think is going to happen with the dollar, which is for it to essentially continue, with or without Mr. Powell talking about stuff or inflation rates coming out, it's essentially a constant uptrend, and I expect it to reach into these zones between now and March. That will have, a bit of pressure on anything valued against the dollar. So the Nasdaq is clearly going to be one, and crypto also be another. So with Bitcoin specifically, yesterday we came up to the center of the Bollinger Band here, got ourselves a rejection, which is fine, that's okay. We were talking about the signal to be generated on the 4-hourly, which has now happened. So we've got that about 12 hours ago. That is now a signal in the waiting, so we would expect a move up from that. These things don't have to happen. They happen more often than they don't happen, so there is a good chance that it will happen. And all this means is rather than a continuation of a trend signal that you get on Ichimoku clouds, this is I suppose a long position up to what you would consider to be significant resistance, which the first problem we've got is that the first level of resistance is the biggest one here, which is the descending trend line. I call it the electric fence because that's how it feels every time you come up to touch it. I don't know if you've ever had an encounter with an electric fence, but it's pretty nasty. You come up to it, oh my god, that hurt, oh god, and then obviously that's a bit extra there, but and then we kind of recover. Oh my god! Oh, that wrecked. That really hurt. Oh my god! It really hurts. And so we are actually pretty much there again now. So what we'd expect is a shock from there, which is unfortunate because we were looking at that signal, hoping for the best for it. We're like, this signal generally is quite a powerful signal, but if we took a long position now, what, you're going to look for a 2.5% move at the moment. It's not very good. Even up to the top of the horizontal and the 200 exponential on the 4-hourly only really yields a 6.5% move. So even though we are looking at that signal as a genuine signal that plays out most of the time, it doesn't look like it wants to yield a great deal just based on the extreme power of the resistances that are above us and the dollar, which is looking for a bounce at this current level, almost at this current level. We're going to know a little bit more in a few hours, obviously, when traditional markets open, but the odds are against it, continuing certainly in the short term, but the odds are in favour of it getting a significant rejection from either here or here, and then coming back down to sweep the lows again. And that's okay. I know this might sound all like counterproductive, but what? I only want up. Why down? Why is down a good thing? Now, I'll tell you why. Because in the most simplest way to look at a chart, waiting for a reversal, you really want to get some bullish divergence forming on your RSI on the daily, like what we had over here. So our big stab down, oversold RSI. Not as bad as this one, I have to say, but again, this is all part of the expectations I've got on this chart over the next few months, into March. And so we got our bullish divergence form, lower lows form, higher lows form, and before you know it, I'm drawing lines all over the chart. I get excited when I see that sort of thing. At the moment, we don't have any kind of bullish divergence. We had an RSI breakout, which is good for itself, and that offered up a bit of continuation up to this trend line, which is fine. And that was an okay trade if anyone took an opportunity of that. It was okay, but it's not very powerful. What we want to do is a reversal. We want to see a reversal. In order to see a reversal, you're going to have to sweep the lows again and maintain higher lows on your RSI, and that's what I'll be looking to see, and that's what I'll be hoping for, and that's what I'm expecting, to be honest with you, because that is the best way to determine a turnaround point simmering and brewing. Doesn't have to play out, but it's usually the best. It's a shift in momentum. Momentum for the down is slowing. We're building up some accumulation. We're ready to pick up Bitcoin from its lows. And if you're anything like me, you've been taking little slices and stabs at all these levels. I got some at 40,600, got some at 35. My next is down at 32. See what happens. And again, this is all very likely to turn around anyway. Shouldn't be a problem. Bitcoin always turns around. The question is when, and at the moment there's no signs of it suggesting when. Now, if that 4-hourly signal plays out and the dollar goes down further than we expected, and maybe says that's enough for a little while, and traditional markets continue to pick up, which they might, we could get that signal that we've looked at on the 4-hourly could push us up above here. And if it does, and we turn this to support, maybe we can turn around in here and find ourselves an accumulation within this zone between 40,000 roughly and about 46 to 49,000. I don't think that's going to happen though, because it just does not seem strong enough to be able to do that and sustain that kind of price action up there. It does make me feel like the most likely scenario is that we do get rejected, break down once more, sweep down the lows, hopefully 32,000 for my own personal benefit, maybe even a little lower than that, coming down to this major support, which is the summer lows, 29,000, and that's where the bullish divergence continues to form. So maybe we go to 32, then to 29, and that's where we start to really turn around at that point. And again, we're not looking for anything major on this to turn around between now and March, really. So all eyes on the prize. If I had to put it in a very brief summary, I'll be looking for this to have a stab up and then come back down again. That's what I'll be looking for. Right. Well, I don't know why I don't just make a little video just saying that in the future. Essentially that's all I've said, really. But in summary, that's what I'm looking for. There you go. Easy does it. Right, thanks for watching, guys. Hope you have a nice day. Take it easy.